Hi everybody, today I'm going to provide you an update of my live stocks and unit trust portfolio. We currently have a market value of around 34,000. The market have been volatile this year, and both my stocks and unit trusts are currently in the red. I will also share with you what is my strategy and plan going forward. Now, first, let's look at my stock portfolio as of 24th of May. The changes from the previous update is I have added in 2 new counters. For the Singapore side, I have added in Ascendas REIT, and for the US side, I have added in Apple. On top of that, I have also averaged in Mapletree Logistics Trust and JP Chase. And the portfolio market value currently standing at 13,000, where I still got a cash of close to 7,000. This portfolio as a whole currently down more than 4%. So this is the breakdown on the Singapore and the US stocks. So you can see that practically almost all are in the red except Parkway Life and Visa. These are the 2 counters that currently still positive as of 24th of May. The intention of this portfolio is to focus on income and growth. The Singapore stocks is mainly focusing on dividends, and the US stocks are mainly focused on growth. For year to date, from January until today, the total dividend collected is $42.49 Singapore dollars, which is pretty low as this portfolio had just started in January this year. And this is how I top up the portfolio. It started on 31st of December where I put in $5,000. And after I start to earn $2,000 per month. And from mid-February, I start to change to adding every $2,000 every 2 weeks. And currently the total capital injected is 21,000. And the market value now is $20,065. So you have a loss of slightly less than 1,000 Sing dollars, about 4.45%. Let's look at the individual stocks performance compared to the market. So let's look at the 4 REITs that I have in the portfolio, which are mainly blue chip REITs. But from the chart, you can see that all the 4 REITs have actually underperformed the STI year to date, where Parkway Life have the lowest drop of 4.29%. But the STI is practically flat or up close to 2% year to date. And Mapletree Logistics Trust suffered the heavier losses of close to 15%. But do take note, this is based on price return. It excludes the dividends. And let's look at the Singapore counter, which is the only Singapore stocks that's in the portfolio is OCBC Bank. From here, you can see that the OCBC Bank stocks performance is on par with STI index. And look at the volatility of OCBC over STI. OCBC, especially during the February period, it have a huge spike increase, and thus you can see the volatility of OCBC Bank shares is actually higher than the STI index. So with the risk underperforming the STI index and OCBC on par with the STI, so it expected that my portfolio underperformed the STI. Now let's zoom into the US stocks, where there is currently got 7 counters, and 4 of them are actually listed in the New York Stock Exchange, and 3 of them are listed in NASDAQ. So let's look at the 4 stocks that is listed at New York Stock Exchange, where we have Visa, JP Morgan, Nike, and Disney. And when compared to SPX, which is at S&P 500, S&P 500 year to date have down slightly more than 17%. And from this chart, we can see that actually Visa indirectly have outperformed S&P 500. You have a drop of 8.4%. However, JP Morgan and Nike and Disney underperformed the S&P 500. And let's look at the other 3 stocks that are listed on NASDAQ, which is Microsoft, Costco, and Apple, where year to date have delivered a more than 20% losses, which is much more losses compared to the S&P 500. You can see there's this IXIC, which is a NASDAQ composite index, which actually year to date have down 28%. For my portfolio, my focus is reference back to S&P 500. Thus, in general, you can see that all my US stocks except Visa have underperformed the S&P 500. Although you can see the losses is about 7% just for the stock portfolio as a whole compared to the 20% losses, because I have been buying it progressively. I didn't buy on 1st of January, and also I have do an average in for JP Morgan and Mapletree Logistic Trust. What is my strategy going forward for 2022? I will still continue to top up 2,000 in the beginning of the month and 2,000 in the middle of the month until the portfolio reach 50,000. I will still continue to increase the number of holding. For Singapore stocks will be 10, for US stocks will be 10. And as for the cash holding, I'll maintain at least 40% in cash. Currently, the cash holding is slightly less than 35%. It means that if the cash holding less than 40%, I will not do any buy transaction or averaging transaction for the portfolio, as I personally feel that the market is not really stabilized yet, and they may have some potential downside going forward. And as for per counter, I will still cap at 5,000 maximum per counter. And for every purchase, the first purchase will still maintain close to 1,000. The averaging will be 1,000. And the subsequent averaging will be based on 1,500 and 1,500. So this means that every time I buy a stocks, I can have an intention to purchase these stocks 4 times before it hit the 5,000 cap I set per counter. Now let's move on to the unit trust portfolio, where currently have invested capital of 16,000. However, the market value is 14,121. And the current portfolio allocation is close to my initial allocation of 25% in FSA Dividend Advantage and 25% in Infinity US 500 and 30% in the Global Fund, which is the United Global Quality Growth Fund, and 10% each on the Greater China and the Global Technology Fund. So the portfolio actually is approaching my ideal allocation of 25, 10, 10, 30, and 25%. At mid-April, I have do another lump sum top up of 1,004 into the portfolio by only investing in 3 funds. What have changed since my last update is United Global Quality Growth Fund have a subscription closure effective from 29th of April. But this will only affect lump sum cash investment into this fund. So for CPI investment, SI investment, and my ongoing RSP on this fund will not be affected. But it also means that I'm not allowed to do lump sum ad hoc top up into this fund going forward. I can only invest in this fund through RSP, which is the monthly investment. This is the transaction top up history for this portfolio since 1st January. So the current market value is about 14,121. So the losses is slightly less than 1,900. And we make up a loss of about 11.74%. And this is the year-to-date performance of all these funds. My portfolio as a whole actually is outperformed the individual fund because my portfolio actually down only about 11.74%. One of the key reasons is I doing regular ISP, which actually bring down the volatility. You also do some dollar cost averaging so that the portfolio actually down less than the market. So what is my strategy for this unit trust portfolio going forward? I will continue my $2,000 per month RSP. However, I have inserted a new global fund into the portfolio for the RSP. The main reason is UOB United Global Quality Fund, I can't do any more lump sum top up along the way. I can only do it on an RSP basis. So I decided to have one more global fund to run parallel with the UOB United Global Quality. I'll share with you more on this new global fund during my next portfolio update. Also, I plan to do a mid-month lump sum top up from June onwards to capitalize on the current volatility of the market and also to bring down the volatility of the portfolio. That's all I have to share with you on this portfolio. We will see how this portfolio is going to ride through this current market uncertainty and maybe a possible recession. So stay tuned and continue to follow my channel, and I'll provide regular update on the portfolio. If you find that this video has benefited you, do remember to like, share, and comment on this video. And lastly, do remember to subscribe and press the notification button so that you'll be notified on my next video. I shall see you in my next video. Bye-bye.